African Development Bank. Mr. Karuga. Is Mr. Karuga here? You are? Okay. That one I got right.
Yes, you did. I should test you in Swahili. After this. Good morning, good afternoon, ladies and gentlemen. Riding on the protocols of those who spoke before me. Ladies and gentlemen, our hosts, of course, Lord Boateng, CEO, Deputy CEO, Chief Executives of all financial institutions represented here, Managing Directors, all the participants today, like Lord Boateng said, all the feathers of the eagle. Good afternoon, ladies and gentlemen. As you've been told, my name is Julius Karuga. I'm part of the African Development Bank Trade Finance team, particularly the business development side. And this afternoon, I'll be going through what we see as some of the key dynamics, emerging trends, relationships and issues across the continent that relate to trade finance. To begin with, there is hope because, as we can see, globally trade finance is expanding, and also here at the continent or in the continent, it is also expanding, and we are hoping that with that growth, it brings opportunities. And the hope that we have is because, as was said early in the morning by some of the speakers who spoke ahead of me, is I think it's a case of a chicken and egg situation where economic growth drives trade, trade drives economic growth, that interdependence. And because we have a resilient continent that is growing economically, we have hope that is going to give us growth from a trade perspective. But some of the issues that we are grappling with, or that we are alive to, is the fact that debt pressure and liquidity are real on the continent. We are aware that a few countries on the continent have been grappling with high debt levels, restructuring, and of course that affects flow of liquidity, ability of players in that economy to interface, particularly to exchange goods and services. On the other hand, we have a continent that is in the process of instituting strong structural reforms, because we are faced with a globe that is changing. We are forced to be takers of some of the emerging issues continentally and also globally, because when we have challenges on the global scene, they spill over to the continent because of the, again, connectedness that we see. While we have an opportunity, while we have a chance to unlock demand, we have a problem, a significant one, and we need to solve it. And it has been talked about severally today in the morning, which is the case of the unmet demand on the continent, the significant trade finance gap. And my colleagues carried out a survey last year, should be coming out very, very shortly. And they interfaced with over 200 commercial banks on the continent, representing 36 countries, to really want to understand what are the issues that are driving this trade finance gap. And of course, they estimated where that trade finance gap was And as you can see the evolution, the hope is that it actually declined last year. And that is the reason why you see some of the chart shows that there's a downward trend. And we are hoping again, with some of these conversations that we are having here today, that trend will continue downwards. But again, we ask ourselves, what are the big contributors to this trade finance supply gap or demand gap? And what came out of that survey is that regulatory restrictions are actually the key drivers, one of the key drivers. And we're having a conversation over tea this afternoon, and some of our colleagues were relaying some of the issues and challenges that you have to grapple with, especially, particularly this region. But that's a representation of the many issues that the continent we face, where you cannot move goods from one country to the other freely. Even movement of people. Some of you came from different countries and you had to loop over, different destinations to get here. You can imagine if some of these regulations were not, regulatory restrictions were not there, would be in a position to trade freely. And of course, that will help to sort of dampen this elevated trade finance gap. We, of course, also have this issue of insufficient limits with correspondent banks. And we'll see more details about that later. Because when you do not have sufficient liquidity, sufficient limits to interface with either an exporter on the other side or an importer of whatever goods that you are dealing with as a bank, certainly that's a limitation. And it was clear that 30% of the respondents said that that's a clear problem. The other one is limited foreign exchange liquidity. And we all know very well that Forex reserves have very many competitors, and we are all depending on Forex that we are not generating sufficient of. And that's the reason why export development is important. And of course, the issue of limited staff, perhaps one of the minor ones. Competition, of course, we are all here, we are perhaps running after the same clients. But the other one is the issue of risk capital, where your balance sheet is limited, your client is asking for big limits or big lines of credit, and unfortunately, because of the regulatory issues that are there or the regulatory requirements that are put in place for financial stability, you're not able to effectively facilitate your clients. And that's why some of this collaboration with DFIs and other big financial institutions come in, and I'll be talking about that later. The issue of what has now been a topic of the day since morning, the Continental Free Trade Area. Could it be a solution to some of these issues that we are talking about here, some of these challenges that we have mentioned? Because if we are one continent, one unified continent, as AfCFTA aspires us to be, we can unlock 1.3 billion market of people, 1.3 billion people forming one market. And the value there will be 3.4 trillion in terms of combined GDP of all these countries on the continent. And that is significant. If we can all speak with one voice, that's a significant step. And the other one that AfCFTA sort of attempts to enable is trade facilitation and growth. We are saying that as a continent, if we can trade with and amongst each other, and some of the challenges that we are facing preventing us from doing that, then we will achieve that unified market. And By doing that, then we are unlocking significant trade, which as trade practitioners, we are here and will be, I believe, expected to play a significant role in that. And the other one, which we have seen, is that there is a need for regional value chains development, because some of these countries on the continent are sitting on huge potential of raw materials. Some of them it is demand, or all of us it's demand, but we are not processing, we are not buying from each other. And what does that do? It limits our ability to do business together. It limits the continent's ability to progress. And that is one of the areas that AfCFTA seeks to address. And the other one, of course, is the issue of infrastructure and digitalization, where you have had infrastructure, roads, rails, ports, and also the IT side of infrastructure. Because if we are all integrated as one continent, you can move goods from the Gambia to the other side of the continent, the Eastern African side where I come from, or the opposite. Or you can move some of the critical commodities that are being produced on the continent and are needed in other markets, but we are not able to move them because we are not connected. And what does that then happen? You know, what then happens is that companies from other continents come and take those materials, they process them, and they sell back to us. And I think a very good example is what Dangote has done. Taking the resources that you have in Nigeria, crude oil, refine it, and with that output, you can sell internally. Of course, that's a major contributor to the economy of Nigeria, but also the region. You don't have to import oil from other countries, especially importation, as was the case before. And of course, with AfCFTA resolving challenges that affect trade, there are opportunities. And these are opportunities to procure and facilitate machinery, because with machines being required for production, processing, it's an opportunity for us as trade practitioners to finance. But as the minister was saying, or the governor, there's the issue of regulatory issues or structural issues that we as trade practitioners